My property tax statement comes in a manila envelope, 4 pages stapled once in the corner. The total last March was $3,847. I wrote the check like I always do. Then about 3 weeks later, my neighbor Frank mentioned something about an exemption line near the bottom of the statement, a section I had glanced at and skipped for years. I went back and looked. There it was, a line I had walked right past 3 years running. My name is Dale Corbin. I'm 68. I'm not a lawyer, and I'm not from the government. I read the forms myself because I had to. Nothing in this video is legal or financial advice. This is how to check eligibility and nothing more. That line Frank pointed out was for a senior assessment freeze. When I called the county assessor's office the next morning, the woman on the phone told me I had been eligible since the year I turned 65. 3 years. She said it matter-of-factly, like she was reading from a file. It wasn't routine to me. It was $1,100 a year I had been overpaying because nobody named the program. So why had I been paying full rate for 3 years? Because nobody mails you the application. They mail you the bill. The county knows how to generate a bill, but the form that might cut that bill by several $100s, or in some cases several thousand, is a separate document kept in a separate drawer, and you have to name it out loud before anyone pulls it out. The system works exactly as designed. The design serves the office budget, which is why the incentive runs in one direction and does not point toward your savings account. I'm not saying anyone on the other side of the counter is doing anything wrong, but there is no money in teaching you the cheap answer. If you'd asked anyone on my street about their property tax bill last spring, they would have told you there is nothing you can do about it. You get the bill, you pay the bill. They had no idea. But you will. I'm going to walk you through 5 specific programs that may reduce property taxes for homeowners 62 and older. For each one, I'll give you the program name, plain English what it does, who may qualify, and the exact words to say when you call. None of these programs are guaranteed. Every single one is means tested, income limited, and different depending on your state and county. But checking costs 10 minutes and a phone call, and the savings can run to 4 figures a year. Let's start with the program most clerks assume you already have. Number 1, the homestead exemption. This is the baseline. If you own your home and live in it as your primary residence, you may qualify for a homestead exemption in most states. A portion of your home's assessed value gets shielded from taxation. If you're wondering how that's even legal, so is everyone else. It's legal because state legislatures built it into statute, in most cases decades ago, as a mechanism to protect longtime residents from being taxed out of their homes. If your home is assessed at $300,000 and the exemption is $50,000, you pay taxes on $250,000. That gap compounds over time, particularly in counties where assessed values have been climbing. The problem is that you have to apply for it. The exemption does not attach to the property automatically when you buy the house. Nobody hands you the form at closing. And if you bought the house years ago and never filed a homestead application, there is a real chance the exemption is not on your record. Call your county assessor's office. The phone number is printed on your property tax statement. When someone picks up, ask them to look up whether there is an active homestead exemption on file for your address. If there isn't, ask what form you need to file and what the deadline is for this tax year. In most states, the homestead application has to be submitted by a date in late winter or early spring for the reduction to show up on that year's bill. Your county assessor's website has the specific form and the deadline. Searching for your county name and the phrase homestead exemption application will get you there. In a few states, the filing goes through the state revenue department rather than the county. So if the county clerk seems uncertain, ask whether state-level filing applies to you. The honest limitation is that homestead exemptions do not exist in every state, and some states offer only a small one. A handful have none at all. But your county assessor's website will tell you what is available. So will the Property Assistance section at benefits.gov, which is a federal resource that compiles state programs. But homestead is only the beginning. There is a second layer that many homeowners with a base exemption have never been told about. Number 2, the Senior Citizen Additional Exemption. Most people who have the homestead exemption do not know there may be a separate exemption stacked on top of it for homeowners 65 and older. It goes by different names in different states. Senior Homestead Exemption, Over 65 Exemption, Elderly Homestead Exemption. The structure is the same in every version I have reviewed. It reduces your taxable assessed value by an additional amount beyond the base homestead on a separate application. This one is almost always means tested. There is an income cap, and the income threshold is typically different from the one attached to the base exemption. In 2026, Florida's additional senior exemption for income qualifying homeowners 65 and older could reduce assessed value by up to $50,000, but the income ceiling is set locally and verified by the county property appraiser each year. The Florida figure is one example. The point is that the program exists in many states, and the specific dollar amount and income ceiling are set at the local level and change. Verify the current number directly with your county before you plan around it. When you call the county assessor, ask specifically whether a senior layer exemption exists separately from the base homestead, what the income limit is for this tax year, and what form you need to file. Ask for the actual name of the application they use. Write it down, then download it from the assessor's website or ask them to mail it. And no, I'm not making that up. Many people who have carried the base homestead exemption for a decade have never been told a second filing exists, but you have to name it first. The honest limitation is that some states fold the senior component into the base homestead application rather than making it a separate filing. But when that is the case, the clerk will tell you when you ask. Either way, the phone call takes 10 minutes. But I wasn't done. There was still more to find. Number 3, the Senior Assessment Freeze. This is the line Frank pointed out on my statement. This is the one that cut my bill by $1,100. The word freeze was printed in small type in the exemptions section near the bottom of my statement. I had been throwing those statements in a drawer for 3 years without reading past the payment coupon. That was a warning sign I had been walking past without knowing it. Here is what a freeze does in plain English. In states that offer it, this program locks your home's taxable assessed value at the level it held in the year you first applied. After that, even if property values in your neighborhood climb, the county cannot increase the assessed value of your home above that frozen number, as long as you qualify and renew the application each year. If you'd asked anyone on my block about this program before Frank mentioned it, they would have told you they had never heard of it. The assessor's office kept the application behind the counter, and nobody was handing it out unsolicited. The savings compound depending on how far values have moved in your area. In markets where assessed values have run up sharply over the past several years, a freeze applied a few years back can save $2,000 a year or more, which is why the program matters most in fast-moving areas. In a slower market, the savings are smaller but still real, and they grow every year the freeze holds. The Illinois version of this program is called the Senior Citizens Assessment Freeze Homestead Exemption, administered through the county assessor's office. But other states have it under names like Senior Valuation Freeze, Senior Property Valuation Protection, or Homestead Assessment Limitation. The structure is consistent across the programs I've looked at: an age requirement, an income ceiling, a primary residence requirement, and an annual renewal. Call your county assessor and ask whether your state or county has a senior assessment freeze or a senior property valuation freeze. Ask for the program name, the income limit for the current tax year, the form number, filing deadline. But do not rely on numbers you find on a third-party website for any of this. Get them directly from the assessor's office or your state's Department of Revenue website, because income limits on these programs adjust and a figure that was accurate 2 years ago may not be what you will hear when you call today. But here's the detail everyone misses. The freeze requires annual renewal. File, get the reduction, and then if the renewal notice ends up in the wrong pile the following spring, you lose the frozen value for that year. The bill goes back up. You have to refile to get the freeze restored. Write the renewal deadline in your calendar the same day you mail the initial application. Some county offices send a renewal reminder, but many do not, so do not depend on one arriving. The form I filed was 1 page, front and back. It took 11 minutes to complete. I had walked past the line on my statement for 3 years because nobody told me to name it. $1,100 a year. That covers a utility bill, a month of groceries, 3 tanks of gas. If you've been thinking about subscribing, this is a good moment for it. I put out 1 video a week, no products to buy, just the forms they don't send you. Hit subscribe and let's keep going. While I was working through the freeze paperwork, something else was sitting in the same pile from the assessor's desk. A second program, filed at a different office entirely. Number 4. The Property Tax Circuit Breaker Credit. This program looks at your income directly, rather than the assessed value of your home. A property tax circuit breaker is a credit that activates when your property taxes represent too large a share of your household income. The name comes from an electrical panel. When the load gets too heavy, the breaker trips. The tax version trips when your property taxes exceed what the state considers a fair burden relative to your income. In some states, you claim this credit on your state income tax return, but in others, it is a standalone application filed with the state's Department of Revenue or the state's Department of Taxation. States with active circuit breaker programs include Michigan, Minnesota, Maine, Maryland, Vermont, and several others. The dollar amounts, income thresholds, and age floors vary by state and change from year to year. Call your state's Department of Revenue and ask whether the state has a property tax circuit breaker credit or a homestead property tax credit for seniors. Ask for the income ceiling for the current tax year and how to file. Some programs have a minimum age of 62 or 65. Others set the floor lower. And this is where things get interesting. In some states, you may qualify for both the assessment freeze from Program 3 and the circuit breaker. These are 2 separate programs filed in 2 separate offices. But many homeowners who carry one have never filed for the other. I mean, think about that for a second. 2 separate programs aimed at the same oversized tax bill, both available to some of the same homeowners, and neither one arrives in the mail unless you go looking. One thing to watch when you call. The phrase homestead credit appears in 2 different programs in some states, one administered at the county level and one by the state. When you call, ask the person to confirm which program they are describing and which form number applies to what you are asking about. One mix-up can mean filing the wrong form with the wrong office and waiting an entire year to find out. The honest limitation is that circuit breaker programs vary significantly in the size of the credit. Some are substantial, others are small. The only way to know what your state offers and whether your income falls under the ceiling is to call the state's revenue department and ask. For a while after finding the freeze and the circuit breaker, I thought I had found everything worth finding on my bill. I almost stopped looking, but that was a mistake. Number 5, property tax deferral. A lot of people on fixed income have never heard about this program, and in the right situation, it is the reason some people are still in their homes. If your income is low enough that none of the reduction programs fully solve the problem, some states allow eligible homeowners to defer property taxes entirely until the home is sold or the title is transferred. What deferral means in practice is that you do not pay the tax now, but a lien is placed on the property. The deferred amount accumulates with interest until the home eventually changes hands. You stay in the house. You do not lose it for unpaid taxes while you are living there. States with active deferral programs include Oregon, Washington, California, Florida, and several others. Oregon's program is administered by the Oregon Department of Revenue, and the application goes through them directly rather than through the county assessor. The eligibility requirements are typically strict: an age minimum, an income cap, a minimum equity stake in the home, and a primary residence requirement. The balance grows against the home every year at an interest rate set by state statute. That rate is generally lower than consumer lending rates, but it compounds. Think of it as a bill pushed to the back of the calendar rather than removed from it. This program fits the homeowner who is genuinely cash constrained now, but has equity built up in a home that is largely paid off. If that describes your situation, knowing the program exists matters. If not, the earlier programs in this video are the better path. When you call your state's Department of Revenue, ask whether the state offers a property tax deferral program for seniors on fixed income, what the age and income requirements are for the current year, and whether applying for deferral interacts with any existing mortgage or home equity agreement on the property. But that last question matters most if you still carry a mortgage, because some lenders include property tax payment clauses in their loan terms that could complicate a deferral application. Let me put all 5 together before I send you off. Number 1, homestead exemption. Call your county assessor. Ask whether the exemption is on file for your address. If it is not, ask for the application name and the filing deadline. Number 2, senior citizen additional exemption. Same office. Ask specifically whether a senior layer exemption exists on top of the base homestead, what the income limit is for this year, and what form you file. Number 3, senior assessment freeze. County assessor again. Ask for the program name, the current income cap, the form number, and the renewal deadline. Put the renewal date on your calendar before you mail the application. Number 4, property tax circuit breaker credit. Your state's Department of Revenue. Ask for the program name, the income ceiling for this tax year, and how to file. Number 5, property tax deferral. Your state's Department of Revenue. Ask whether the program exists in your state, what the income and equity requirements are for the current year, and how it interacts with any existing mortgage. The bill that came last spring was $1,100 lower than the year before. The form that did it was 1 page. The reason I hadn't filed it for 3 years is that nobody named it. The county mailed the bill every spring. They did not mail the application. None of this is a trick, and none of it is guaranteed. Every program I walked you through is means tested. Every dollar figure and income limit should be verified against the official source before you count on it, because these numbers change and some of mine may not be current by the time you watch this. Your county assessor's website and your state's Department of Revenue are the 2 places to start. The application will not come in the mail. You have to find the form and name it yourself. If this helped, subscribe and tell me in the comments which bill is hurting you most right now. I read every one of them. I'm Dale Corbin, and I'll see you next time.
Before you go, everything I just walked you through, the form numbers, the offices, the exact words to say on the phone, I wrote all of it down. 3 plain English guides, organized by the form. They are at dalecorbinbenefits.com or scan the code on your screen. I am not a lawyer and I am not from the government. These do not promise you anything. They show you how to check in about 10 minutes before you pay another bill you might not owe.